A very warm welcome to you. Many thanks for joining us on this week's edition of the program. We remain your source for all the latest happenings in the world of business. My name is Lucy Ulube. On our lineup this week, first we join Faith and our guest, Mr. Shola Tinubu, Managing Director, Skip Nigeria and Co. Limited, on the CEO Rendezvous for the continuation of their exclusive interview where they discussed insurance industry capacity and aviation insurance matters arising. Speaking during the interview, Mr. Tinubu said that the insurance industry is not investing enough in its human capital development to underwrite special risks. Take a listen.
I must tell you that I don't think we are investing enough in knowledge capital, if I may use that word. And it is very crucial for some businesses and products more than others. So what you need, so we need to be able to do a bit more in terms of that. Now, what does it mean? It means that people are going to have to, companies are going to have to send people offshore to go and sit down with them, attachments and all of that. But let me tell you, there's always a limiting factor.
On this edition also, we will bring you a special report on fire insurance. There is no doubt that billions of naira has been lost to market fire in different parts of the country, and much more will still be lost. Oftentimes, when these market fires occur, the people cry to the government for help rather than resorting to their insurances. Why is government playing the role of insurance companies in Nigeria? Why are people not insuring their own goods in the market? Are people even aware that with a small amount of premium, their goods can be insured against fire? All these questions are what the special report seeks answers for. But first, let's check out some excerpts from the report.
Why people don't take insurance in this part of the world is more of knowledge of insurance or importance of insurance to their business, to the survival of their businesses. So it has to do with lack of knowledge and understanding of insurance.
Plus, of course, all the other extras will bring you each week on the program. So sit back, relax, and enjoy the lineup. Details in just a moment. Please stay with us.
Premiumbeat.com.
Because when a client goes to a broker in Europe and says, "Oh, broker, please place my business," they don't tell them, place it with AXA, place it with Leadway, place it with, any of these companies. They tell them, place my business with an insurance company of not less than a rating of A minus or B plus, or what they would have had what they think they can afford, and they say, well, that is it. Anything lower, I don't. And the broker then goes around the world and is able to find the markets that will give them the best terms but are not rated less than that. So if you are in Nigeria and you are rated that way, such as Africa Re, also sort of headquarters in Nigeria, they attract business from all over the world. Because all the people see them, see their rating, and the business finds them. So you have business they seed out, but you also have a lot that comes in. And so their business model is they still have their significant sums insured, significant premium income, but it's balanced. It's not just something that's coming from one sector or one risk and the like. So when people talk about capital in itself is not. There's no. If you keep pushing capital up, it doesn't really give you that leverage that you want to be able to do more business. There is a correlation, because I can tell you, if you have only $1 as your capital, definitely you can't do anything. So there is a minimum that you need to have to be able to do the business. But just by saying you add another $1 million to it doesn't actually grow that your retentions by that much. and then you now find out what exactly did you do this for. So what I find strange when we're talking about increase in capital is that we're seeing statutory or regulatory led increase in capital. And there's no ideas or product led increase in capital. So you're asking people to increase capital, but you've given them no idea about what product
to sell
or to use to, and the products they're already selling, they have enough capital to sell it. So
and they're not even selling.
And they're not even selling enough of it, even with the capital that they have. So why would you? So when you then increase that, or you then end up, and I can tell you what happened the last time we increased capital. Many of them just lost their capital because they went, on an adventure looking for things to do with their capital, not their core business. So some people went to asset management, and some people lost their money. Some people went to oil and gas, and you could see a rig or two sitting down on the marina there. And some people, some insurance companies were sweating because they had monies, also logged in there. And people went into different things, because it wasn't capital that they voluntarily went to go and get. Because before you go and get capital, you have to tell yourself, what do you want it for? What are you going to use it for? Are you going to pay returns on it? But if you just have it because, they say that's the minimum capital you must have to, you won't remain in the business, so you have to go and get it anyway. You will get it if you are able to, but then you are now stuck with, what do I do with this capital? And so what I would really have liked to see is an ideas-led type of search for capital. Because when you see there's a couple of companies that did not even need, in the last round, or the round of recapitalization that we are still not concluded, but even the figures that were thrown out, there are a couple of companies that didn't need to do anything. They already had that capital. Those companies, what did they do? Those companies, what have they done? Let the others know and copy. So what have they done with that capital? So if I now get that their own capital, I'll be able to do all those things that they're doing. But what have they really done? Have we been able to break into retail markets? Have we been able to, have we been able to then, retain, so much of the oil and gas business or aviation business or all of that just because they had that capital? So I just think that we just need to be very circumspect about why we're driving that. Risk-based capital is the best. And I hear the regulator embracing it with one side, but still looking for some minimum before it starts. And that minimum is such a large one that it's shaking the table in a way, and everybody's just not so as comfortable with those minimum levels. But risk-based capital just means, hey, look, the capital that you need should relate to the business that you are doing. So if you want to just do motor insurance and that your license is global, you can do all, but you want to focus on motor insurance and that, why would I need some crazy capital? So if I don't do that and I have the crazy capital, the excess one, I have to start looking for
what to do
with that, just to ensure that I can give returns to my shareholders. So I just think that that's not right. So if we want to face risk-based capital, we should. But just in case people think that just by raising capital, the reward for retention of business locally will be, significant, it's not true. And it's an arithmetic model thing. We can do the arithmetic model thing. We can tell you how much capital, if you do an additional X of capital, what that would do to your retention in aviation, for example. So, and if I'm saying that the whole market is doing $400 million now, if you raise that capital, it won't be that significantly more. Now in terms of their net retention, okay, maybe net retentions, you could be doing maybe aircrafts of $20 million, as the hull, not the liability, but hulls of about $20 million, and that they'll be doing comfortably. If they now increase their capital, okay, well, they'll be doing $25 million, aircraft that can be 25 million. Where is that going? So I just think that we should stop, running around in circles. The same companies we're going to in Europe to give business to, those same companies in Europe, insurance companies, are reinsuring it as well. They reinsure it. I've seen us, I've seen people come to me from Egypt offering skip reinsurance broking function, NNPC risks. And it's coming from Egypt. Because that means he left here, he went to another company, from that company, they reinsured it somewhere, and they're now looking to whether they wanted to offload it somewhere else. And say, look, do you have any other markets?
They're bringing it back here.
They're not necessarily bringing it back, because we are able to then place it elsewhere as well. You know, they approached a broker in Nigeria to look for a market, whether it's in India or whatever, to help them place the business. But that's how insurance business does. That's how it goes. It just goes round and round and round. And it's that spread. The spread doesn't sometimes stop. Because when we talk about reinsurance, people don't realize that the reinsurers also have their own treaties. So it's called a retrocession. So they retrocede as well. So all it is about spreading the risk in such a manner that when you have large losses, the large losses are managed, you know, over on industry, and you don't have high impact.
Okay, sir, moving on. Let me take you back to the aviation sector and oil and gas. As I said, the narrative has always been hinged on the insurance industry does not have the capacity to underwrite the risk, some of the risk here, and blah blah blah. We need to go abroad, and they are charging us and all of that. But I just want to ask you, if they lack the capacity to underwrite or to retain a large percentage of the risk emanating from this market, where is the place of the local content law that states that the local market must exhaust all options before whatever is left is seeded abroad? I just want your thoughts on that.
In the oil and gas, we have the local content acts, which are called NOJIGDA. And that was since 2010. But NOJIGDA, before NOJIGDA came, there's a sector that already had a working legislation and regulation process for local content, and that was the insurance industry. The insurance industry has started with local content years ago, decades ago, when we had Nigerian Re Act. Decades ago, that's, I don't know, maybe 40 years back now. And the Nigerian Re Act ensured that you were not allowed to reinsure outside the country unless, you know, the rights of first refusal was given to Nigerian Re, which would check to see whether capacity has been utilized, etc., before going offshore. Then later on, the NICOM Act came in, and you have the Insurance Act. And the Insurance Act, you know, has given the Section 72 of the Insurance Act has given the process for local content. So, you know, insurance went far ahead, so that when the NOJIGDA Act came in, the Local Content Act, the only regulator of any industry that they brought onto the board of the Nigerian Content Development Board was the Commissioner of Insurance, and they're on that board, and it was to help them and give them advice, and I think they've been there ever since. So insurance actually have been able to mature in the way they have managed local content, and so I don't think that's even a challenge. It's a challenge in terms of it can be better, etc., etc. But what I'm saying is that it's working, and it's working in a way whereby every insurance company is offered a risk to accept or decline before any risk is then seeded offshore. So everyone would have actually taken their little bits that they can do, etc. And there are and there's room for exceptions, and that's why you have to then convince the regulator on every transaction. So there's a gatekeeper for that, and that's working. And they have that, and they take to the capacity that they want. But also you have to realize, and what people don't realize, that, you know, insurance business is risk. It's not every risk that the insurer wants. There are risks we beg them to take. There's some people's aircraft that we beg them to take because they don't want it. And why don't they want it? Sometimes they're not so sure about certain things in terms of, you know, how they are maintained, in terms of all the other, in terms of which airports they just pop up and fly to, you know, and stuff like that. Sometimes the airports themselves, you know, are part of the larger risk of airlines. One of the riskiest parts of the travel is actually takeoff and landing, and those things always happen at airports. So there are all sorts of things, and if you have concern about a particular airline, some people don't want it. And I could mention one or two that, you know, after they had a crash, you know, many insurers were running away from doing that. So when you talk about capacity,
but sorry to cut into your code, is that ethical for an industry that's supposed to be risk bearers?
Oh yes, it is, because they are supposed to be risk bearers, but also it's a business. So if I know that your house is already on fire, why should I come and you say, now please come and insure this house that's already on fire?
No, that's it. You are giving an extreme,
No, but
extreme example.
You're correct. It's an extreme example. It's just to bring the matter to light. So when I look at a risk, I want to know whether that risk is already on fire. So I look at it and I go and examine the house. I see petrol everywhere. I see they have, the way they have it's supposed to be a dwelling, but where they are having petrol, they store it there. They are also smoking around the corner. So it's not really on fire. But you know that this is already good. It's going to be on fire. Why should I take it? So there has to be an assessment of the risk. And if I think the risk is too high, and especially when I see there's a moral aspect of it, that the housekeeping is not so good, the people themselves are careless, then why should I take that onto my balance sheet? They just think that, don't worry, if there's a claim, I'll just go to the insurance company. That's not the attitude we want. We want the guys who are going to look after their assets, who are going to be very careful, but just know that an accident may still happen, and if it happens, the insurer will be there for you.
Okay, would you also say that maybe probably that's part of the reason why the aviation sector are always shouting that they are not getting, the insurance industry here does not have the capacity, they are not providing the covers that they need?
No, I don't even think so, because the ones that the insurance companies here are stepping back from, even abroad sometimes, those ones are also stepping back from them as well. So I don't think that's the peculiar problem. I just think the noise that is being made has only to do with price, because these businesses are seeded through insurance companies here, and also the other insurance companies in Europe are also backing them. But if someone says, no, I want to go directly to those guys offshore, why? Because I think it will be cheaper. I think it will be there. It's the same reason why some people may not want to buy a car from Western Avenue or from any of the car lots here, or Mercedes-Benz place, or any of those, or Coscharis. Say, no, I'll go and buy my own car there and ship it to myself, and all of that, and all of that.
Some of us have actually done that.
So that's the noise that is happening here. But you see, the people who are doing this are people who have been beneficiaries of local content, and now want to cut out other local content players, because it's a chain. The reason local content is supposed to help us build capacity in so many ways. So when you allow these people to thrive, and the aviation industry thrives, then you have people who are going to be doing catering, right? And the caterers will be here making food for all the planes. Then you have people who are going to be doing cleaning, and also be cleaning planes when they arrive. And you have insurance brokers, and you have all of that. And just because you created that here, but if you now create that for them, and they now come and say, no, the cleaner from London is cheaper. When I land in London, it's better for me to buy my water there. Then you have missed the point. So you have to factor all those things when you're having your model. That if so much has been given to you, then something is expected in return. At least back to your market, back to your industry, back to to the people around you, to your community. And I think that's what we just expect from them. And if there's a specific problem, because every time you could have some peculiar problem somewhere, bring it to the table with facts and figures, and it will probably be resolved, and you see that it won't happen moving forward. But if you're not bringing it to the table, then there's a tendency for people to believe, are you just crying wolf? Is there nothing really? It's just a matter of you're just looking for how to manage your costs any way you can. And on this one, this is the story I'm going to give. On this other one, this is the story I'm going to give. Because I was listening when they were talking about the story of aviation fuel. And so now I said, so it's the turn of aviation fuel to get the heat on this group, and they will say all sorts of things. But the guys who are in the aviation fuel industry will probably have something to say in terms of responding to that as well. So I just think that they need to understand the business that they are in. Aviation business is tough business. It is tough business. It's tough business all over the world. Even with airlines that have massive capital, etc. It is still tough business. But and then the economy is not it's not helping matters. Also all over the world. I mean, you see how many of them park their, planes, during the COVID. So coming out of COVID, everybody is, irritated. Everybody has been hurt. They are, they've been injured by their business has been injured by this. Almost deal with it calmly and engage each other and try to get ourselves out of the doldrums. But instead of just throwing accusations up in the air at everyone, it doesn't help anyone.
Premiumbeat.com.
All right, welcome back. Moving on, we now bring you a special report on fire insurance. The rising incidence of market fire is now a major source of concern to both states and even the federal government. Oftentimes, when these unfortunate incidents happen, government becomes the insurer of last resort, which is a misnomer. Why are people not encouraged to take up insurance in the market? Is it lack of education or public awareness about the workings of insurance? Is fire insurance expensive? Let's find out. Happy viewing.
In the last 2 years, there have been increase in the cases of fire incidents in markets, shopping malls, and residential buildings in major cities across Nigeria. Often, when these fire incidents occur, it leaves in its wake tremendous loss in human lives as well as goods. In developed economy, people usually use insurance to guard against their loss, especially fire insurance. Fire insurance is a contract which requires the insurer to compensate the insured for the financial loss which he or she may face due to the damage or destruction caused to his or her property, goods as a result of fire during a period which is decided at the time of insurance. In return, the insured is required to pay consideration premium to the insurer in order to avail this particular service. In a bid to safeguard the public, the Insurance Act 2003 has provided for compulsory insurance of all public buildings, multi-story buildings under construction. The meaning of public building is so wide that it excludes only perhaps private owner occupier residential building. In any case, no reasonable house owner needs to be compelled by law before insuring his building or goods in a market or mall. So we thought. The recent fire in Lagos Island brought to the fore the low awareness and penetration level of insurance in Nigeria.
A gbọ́ nípa ẹ̀ ṣùgbọ́n kò fi bẹ́ẹ̀ yé àwọn èèyàn wa tó nípa ti insurance yẹn kán tún bọ̀ jáde síta kán wá enlight àwọn èèyàn wa irú àwọn tí wọ́n kàwé wọ́n á lè mọ irú nǹkan tí ìtumọ̀ insurance nǹkan tó túmọ̀ sí gẹ́gẹ́ bí nǹkan tá à ń gbọ́n sí pé tẹ́niyẹn tó bá ṣe pé ó insure ibi ìsìn owó yẹn lọ́sẹ̀ ò ní pọ̀ wọ́n yìí máa assist ẹ̀ díẹ̀ but kò yé àwọn míì so kán túbọ̀ jáde bóyá tán bá enlight wọn àrú àwọn ọlọ́jà wa yìí náà kò ń ṣe pé gbogbo wọn náà ni wọ́n kàwé but tán bá sọ fún wọn dáadáa wọ́n máa bóyá wọn náà máa lè ṣerú nǹkan bẹ́ẹ̀ jẹ́ ní rúmọ̀ tí ó ṣẹlẹ̀ sí ìsìn a lè sọ bóyá ó ṣerú ẹ̀ so eléyìí máa jẹ́ lẹ́sìn fún tí ò bá ṣe òun náà lè fi lọ fáwọn insurance yẹn láti insure property ẹ̀ so ó máa dáa tí ìjọba bá lè ṣe pé kán tún jáde láti máa tọ àwọn èèyàn wa tó ní ṣọ́ọ̀bù ńláńlá lọ so wọ́n á lè mọ nǹkan tí insurance mean torí nǹkan rú nǹkan báyìí.
àti gbọ́npẹ́ ó dáa kíyàn ṣe insurance ààrẹ kíyàn dẹ̀ ṣe nípa ilé nípa business èèyàn pàápàá nípa even though mọ́tò tíyàn ń lò èèyàn lè ṣe insurance fún.
Many people who really need fire insurance often think that the premium they have to pay will be too high, so they leave their risk to chance and probably think it will not be their portion.
Yes, most people knew about insurance, but I don't think everybody is aware about it. Because from this kind of business, I don't think, like me now, I operate with a very small capital, you understand? So I don't think I have the money to be able to insure my, as in to insure my goods for the kind of capital that I have. So I don't have much awareness about this insurance thing, because all my own goods are not insured, because I have a store up there too.
Is it true that premium for fire insurance is very high, or the assumption by those who need it is misplaced?
Fire insurance appears to be one of the cheapest insurance when you look at the basket of risk that insurance company sells. For instance, if you compare fire policy, the price of fire insurance with vehicle, I mean, vehicle is on a very high side. Fire is very, very cheap. You find out that, for instance, let me give an example. You have a premises worth of 5 million and you really want to insure it, you'll be paying far less than 0.5%, which means that you'll be paying a very infinitesimal amount compared to the sum insured, and if also compared to vehicle, which is on the high side. Well, I think the reason, or the major reason why people don't take fire insurance is because they don't really know the importance.
While the required premium sounds ridiculous, given the value of goods that have been lost to fire, the government must take the blame to a certain extent. This is because, despite the provisions in the Insurance Act 2003, implementation and enforcement is non-existent. Even some government buildings which falls under the public building in the Act are not insured. So when the unexpected happens, people lose money and look for ways to get back on their feet again.
That's our time on the program this week. Many thanks for being a part of it. Join us again, same time, same station next week for a fresh package. In the meantime, feel free as always to connect with us on all our social media platforms. Don't forget to join us on our flagship Pidgin English radio program, Waiting Insurance They Do Safe, on Nigeria FM 102.7 every Wednesday by 9:45 a.m. My name is Lucy Lugbe. Until next time, from the entire crew, it's goodbye.